Hello, hello. I am Bigger Crypto, and it's Bitcoin analysis time. In my last video, I talked about the whales and their business model, how they fill a warehouse and then pump up the price, create FOMO, and sell it to dumb money that buys at the top of speculative bubbles. Well, let's go back, and I had been talking about adoption. So, what does the future look like? Well, nobody knows. Literally, nobody can tell the future. It's just not how it's not how the world works. But we can analyze trends and interpret trends. And let's face it, we have a long history of dealing with trends. Okay, so here we go. Here's the adoption curve for a lot of technologies here, right? So at first, you can see this one, this telephone. I mean, you can see how it took decades. I mean, to get anywhere up to like even 90% adoption, look at how long it took. 1900, 10s, 20s, 30s, 40s. So back in the day, it took a very long time, right? But the time that it takes for technology to get adopted in today's day and age is a lot shorter, right? You can see how quickly the smartphone and tablet have just absolutely taken off, right? So we know how to build infrastructure. We know how to, and there's infrastructure there. Like Bitcoin couldn't exist before the internet, right? That had to roll out first. So every technology builds on others. Once you build a wheel, you don't have to reinvent that. You can build millions of other things that utilize wheel technology, right? So it builds on each other, and it's accelerating at an exponential rate. And that is a whole other discussion. I ran a popular singularity, transhumanist, and futurism blog for years and years. So I've been studying this kind of trend adoption and technological adoption for a very long time. So Bitcoin immediately got my attention as something very important. First of all, it's new. It's nothing like it has ever existed. We had to have so many technologies underneath it for Bitcoin to exist on top of. And those technologies are so robust and they work so well that Bitcoin can and does exist on top of it. Now, Bitcoin is only as good as its security. So that is the bottom line. Bitcoin depends on security. So as long as it remains a secure asset and doesn't get hacked and go to zero, doesn't become worthless, then it will continue. The adoption curve will continue, right? So looking at these, you can see it's kind of an S curve, right? It starts at the bottom and then it slowly moves up. And I'll show you another example. See this S curve? So obviously these other examples, it's not a perfect S curve, really, but I mean, it does take off like an S, right? So this is just how it works. So we have our innovators, the 2.5%. Those are the people that invented Bitcoin and were the very first to set up exchanges and all of that. Those are the whales, right? They have so many Bitcoins because back in the day, they were pennies or just a few bucks. So rich or people or early miners, the innovators, right? They got the lion's share right now. And since most of Bitcoin has been mined, these people will remain extremely powerful for the time being. Now, right now, the market cap for Bitcoin isn't high enough. It's still very small compared to stocks and bonds, gold, silver, all of that. It's an extremely small space. So right now we have wild wild swings in price because we're still figuring out what it's worth, what it means to the world, right? And as more money piles in, both institutional and then regular people, the more money in the space stabilizes the price. So once we get full adoption, or like literally massive, like at the end of the late majority, I believe what happens is Bitcoin's price will level off for the most part. And I think so. Right now, the gains are to be had, obviously, in the beginning. So we are currently probably, I would say, in the early adopter stage. I mean, I don't know, 50 million people or something at this point. I don't have hard data on this, but I know that not everybody's heard of it. A lot of people are finally hearing about it, and people are adopting it, right? But we already have, it's got competition. We already have a banking system that's been around. And so people are used to it. They rely on it. The banking system does fail them in some ways, but a lot of people don't even see how it fails them yet. But Bitcoin will be adopted worldwide, and it will be adopted by the people that need it most first, probably. So I imagine at some point in the future, a country or a nation, it might end up being either the national currency or the de facto national currency. Like we're seeing in Venezuela and Zimbabwe and other places where hyperinflation is destroying wealth, people will move it into something that is liquid. You can move it around. It can't be confiscated, and it's deflationary. So right now, for a lot of people, Bitcoin is looking juicy as a place to move their wealth. Now, maybe not people in countries with very good banking infrastructure. We just don't need it right now. That may change in the future. But as time goes on, more and more people will adopt it, either as a store of value or as a currency, or both, one thing or another. And if Bitcoin fails, there may be another crypto that satisfies people's needs, right? We're in the innovation stage. We very well might still be in the innovators. If only 50 million out of 7 billion people have used it, it's still early. Now, if you want to HODL, this very well might be a good speculative instrument. On the other hand, it's only 10 years old. You can lose everything. But if you're long term, right? So this is the knee of the curve right here. It always starts out very flat. It just doesn't seem like it's moving at all. And then it just boom, right? We just get this exponential growth that could end up taking it to 1 million eventually. If the whole world adopts Bitcoin, if the wealthy in the world move their wealth into it, the supply is fixed. There's already, 17 million? Almost all Bitcoins have already been mined, and the ones that come out now are just trickling out, especially after the halving reward, the reward halving in May 2020. It's deflationary, right? So eventually, wealthy people might own most of the Bitcoin, and then little investors will be buying Satoshis, But even if you're gathering Satoshis right now, one Satoshi might be worth $100 in the future. Who knows? But anything could happen in here. We just can't. You can hodl and invest, but anything can happen. That is risky at this point for a lot of people. If you're living in a first world country where it's easier to move your money around and stuff like that. So, all right. So let's get this out of the way. And so right now, look at this. This right here was a huge bubble at the time in 2013, 2014. Look, it just looks flat, right, on this scale, right? But once you can see exponential curves happening. It just kind of keeps happening over and over, right? So this is what the knee of the curve looks like. So this is a smaller scale. This is a speculative bubble. So that popped. This isn't the adoption curve. So, but you can see, look how big that looks. But really, the top of this is only what, 1,200. So, I mean, comparatively speaking, it looks like nothing compared to what happened in 2017, right? And we're gonna get another bubble eventually that's going to make 2017 look like 2014. I mean, it's literally just gonna look like this if adoption keeps continuing. So, I mean, if you're hodling, hodl on, understand the risks. Don't hodl more than you can. I mean, I'm not one to tell you what to do with your money. I'm not your financial advisor, but whatever. It's not for everybody. This channel is going to be about trading. Everybody who hodls understands this and they know why, but I'm just making it clear for anybody that doesn't. They're new to Bitcoins and they're wondering why people are hodling. That's why. So why do people trade? Well, it could be to get more Bitcoins for the long-term investment, right? If you can get more now while it's cheap, right, you can increase your holdings. And if you're good with fiat, living with fiat, like fiat's all right now. A dollar hasn't collapsed or anything. It probably won't for a while. So we're looking for short-term gains. And so you can do that a couple ways as a trader. So you're trading against, like I said in my last video, you're trading against whales that their job is to pump up the price and dump their bags on you, right? So they accumulate bags when the price is cheap, and they dump it on retail traders' heads when they're very emotional and they have fear of missing out on profits. So now that we understand how these markets work and what's happening, we can start to make smarter decisions because we know what smart money is doing. So, but we're small time. We can't move the market. I mean, as adoption occurs in masses of people are moving the market, more slowly. But insiders and whales, they want to move that market more quickly and do it a bunch of times, right? They rinse and repeat, just like 2014, repeat. So over time, they're just making massive money all the time. And they try to throw us off. So I'm going to go to the daily chart here. Look at how they throw people off here. So it goes up, and then we get these bounces, even though it's going down, right? They don't want it to go straight down because there's just too much money to be made by dragging this out for years or a year, however long. All right, it goes up, boom, look at all that. Smart money just dumping on people's heads. There's a bounce because there's a lot of FOMO. People are like, oh, it's cheap now. They still think it's going higher because they've watched it. They've watched it all this time. Oh, it went higher, but then it dumped. It dipped, and then it went higher. So a lot of people believed that this was just another dip, right? Because the dips got bigger. The swings got bigger. So people that don't know, I mean, they see something this big, they just think it's a big dip. So it gets bought up, right? They need buyers. They need people to buy. Otherwise, they can't dump all of these Bitcoins on people. So all these people that missed out are buying for the next leg up that'll never come. And, it happens. It's like a vacuum cleaner, man. If you leave your money just hanging out and you're not just leaving it on the floor for them to suck it up, don't be a sucker. So they're selling it for fiat right there. Boom. Right. And then it drives the price up. People FOMO back in. We get these seesaws. Now nothing goes straight up and down because imagine at this point, like nobody can see past the right edge of where this dotted line is, this dashed line. Nobody knows, man. So when this is happening and we're just whipsawing back and forth like this, people are getting trapped into bad trades all along here, right? Because there's so much volatility that the moment you make a trade, it starts going the other way, and then you freak out and you sell or buy if it's a short. I mean, it's literally made to make you anxious. It's make you emotional and to make you feel fear of missing out and panic, right? And so tens of thousands of people are just FOMOing and panicking all the time. And you can see crypto Twitter just going absolutely bonkers every time. And it's just so obvious. Look at this. Look, this right here is perfectly designed to show you exactly what's happening. So right now, look, greed is back up. When those green bars, right? So this is the lever that the insiders are pushing and pulling on, right? It's your emotions. And you can see it right here. Boom, 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 boom. They know how to ignite that with big buys and big sells. And there's nothing stopping them from do that. It's not manipulation. It's how all markets work, right? The big boys is how they all do it, right? And their job is to create that market. Well, in doing so, the retail traders need to be smart about this, right? You got to be smart. So here we are. Look at this accumulation period. Ignition candle, FOMO, retail traders jumping in, and then boom, selling the bag. It looks just like this, only a little bit smaller. So it's like a big bolt trap. Look at that. Just getting all the people that missed out here, and we're holding the bag and we're waiting for the next big pump to get rich. Look at all that FOMO buying. I mean, you could see it. In hindsight, it's easy to see. And once you know what they're doing, it's also easy to see, right? So you got to pay attention. And you can see in here, it's whipsawing. A lot of people here were just, it's a bear market. It's trading in a small range. People were afraid to take out longs. They were shorting. So when this ignition candle came out, it knocked out all of these shorts. It just liquidated the crap out of a lot of people and created just even more, right? So they're buying into the liquidated Bitcoins and they're accumulating. This is a big accumulation period right here as well. And they know where the stops are. The exchanges, they go on these stop hunts, man. They are savage, right? They go on these stop hunts because, and they know how much it will cost to stop 5,000 people out of their stops, create so much liquidity. They're running these numbers all the time. They know exactly what they're doing. It's an asymmetry of information, right? So you're the dumb money, they're the smart ones. And all we have at our disposal are these charts. We've got these charts, we've got an understanding of trends, and we can look at Google Trends, we can look at the Fear and Greed Index, and what we're trying to do is read what they're doing, what the market wants, right? What is the patterns that we're in, right? This has happened over and over so many times over the last 120 years that people have really paid attention. They've seen the same thing over and over. Well, the insiders know all of that as well. And they will set you up to fail. So in Bitcoin, you see a lot of fake outs, a lot of savage fake outs, savage wicks, right? They are just murdering, just slicing and dicing retail traders to death constantly. These are just, see all these wicks, right? These are just fall right on them. This is just stabbing traders left and right. So as a swing trader, my job is to look at the big swings, right? Take a step back and avoid the noise in the market and all the minute-to-minute emotions that can be created while day trading. Day trading might be for some people. You can get that, like Curb says, soup into sandwich, right? But swing traders, they want more. They want to play the large swings that are a little bit easier to read and see. And so technical analysis is not about like, oh, this is here, so it's definitely going to do this. If you think that way, you're a degenerate gambler. No, every time I see somebody on TradingView post a idea that market's going to do this, they're always wrong. Always. Go back and look at these people that have put those things over the last couple years. Every one of them is wrong. They're just always wrong. Because it's not about being right. Right? You're not going to read the market and be like, oh, I drew some trend lines, so it's going to follow the trend. It's going to go this way. Or I'm going to be contrarian and be like, we followed the trend. There's this candle, so it's definitely going to go down. Like, you don't know. The market makers are out to, I'm sorry to say this, but F your game up. That is their entire job. That's all. That's what they do. Besides buy Bitcoins at wholesale and then sell them at retail, along the way, they're just messing up your game. If you're trying to read their charts, they're the ones printing this. They know what they're doing. So you can read the charts and you can make. We have to interpret it and make assumptions. And all the good traders that I know and follow, they all say the same things, if you notice. What do they say? They say, be patient, be unemotional, understand what you're getting into, look for real trends and patterns, and try to identify, like Curbs says, he says, what does he say? He goes, well, this is live. I'm not going to edit that shit out, but, I flubbed, so I will just move on. All right. Oh God, where was I going with that? Now I'm fucking tripped up. All right. Yeah. Oh yeah. Don't get caught up in that garbaggio, right? So what you want to do is you want to be patient. You want to wait for your play. And what he says is it's not about a crystal ball, but you're trying to look for a favorable. Oh, this is it. You want to look for low risk, high reward setups. And that term setup and look for also implies wait for. You got to wait for that setup. So if you're a trader clicking a bunch of buttons, reacting emotionally, market makers will fuck your game up. What you want to do is wait for the setup, and you might miss plays. That fear of missing out is what they're trying to incite that in you, and you have to keep that under control so that you can just look at it unbiased and then interpret. It's okay to be biased, but you want to interpret a bias from the available data. Okay? So you might say to yourself, well, there's an above average chance, right? So when you go into a casino, the house has an edge on all of those games. And if you play perfect strategy, you're going to get as close to the house as you could possibly get. Right, praying to get lucky and jump over the hurdle, the 50-50 hurdle, and come out ahead, right? But the odds are stacked against you. What you're trying to do here is instead of just gambling on, well, it might go up or down, and I'll go long, and hopefully it's up. Cross my fingers. Instead of doing that, what good traders do, profitable traders, is they wait. They develop patience. They work hard on these skills. They develop patience. They wait. They identify good setups, low risk, high reward, and then they pull the trigger, right? They strike while the iron's hot, right when there's a good play. And all along, when you're identifying good plays, you're going to miss out on some. And that is on purpose. That is an enticement. They're trying to get you to do that. So you have to fuck up their game and go against them. Like Kirby says, you are playing against the best. You got to be smarter than the smart money, and that isn't easy. And patience, they have patience. You have to have patience. I've spent an incredible amount of time deliberately focusing on minimizing and compartmentalizing my emotions when I'm looking at these charts. And I don't know, you can too. And whether you should or not is up to you. I'm not going to tell you what to do. I'm going to tell you what I do. So this is great. All right, so right now I'm going to switch over to another chart here. And there is always a bullish and bearish scenario. Always. Because the price can break anywhere at any time. I mean, a big whale can come in. Look at these ginormous candles, right? This market is savage, right? You cannot, look, you can't mess around. So 4-hour time frame eliminates a lot of noise that we see on the smaller time frame charts. Although you should look at all time frames. You get a big picture, the small picture. It's all data that you can then interpret. And so let's take a look at what happens in these market cycles. And it's called a cycle for a reason. Why do you think it's a cycle? It didn't happen on accident. This is very purposeful, right? You've got to... Shit. I mean, let's look at the Wall Street cheat sheet. This is not an accident, folks. Okay, it's not an accident. Look at this. Look at this thing. It's brutal. All right. Well, I just picked one, and it happened to be talking about Bitcoin, right? So look at this bubble, right? Why does this happen over and over? Because they've got to fill their warehouse and at wholesale prices, then they got to sell it at retail, right? And these are the emotions. The psychology is important, right? So it's great, right? It's just how it works, man. It's just how it works. So let's go through it, right? Look at that. Optimism, belief, it's all happening right in front of our eyes. I mean... So they're dragging it out. Now, the question right now in my mind, right, is where does it go from here? Is this its own bubble, its own speculative bubble, right, where the insiders are dumping here and then they're going to bring us back down and accumulate again? Or is this a dip in a much larger trend? Well, it's hard to say right now. But what I can say is that these bubbles are built like houses, right? They have floors. And as it goes up the floor, there are going to be whales that dump, right? Because maybe when they create these FOMO candles, these ignition candles, igniting FOMO, maybe what they're doing is they don't even know how far the price will go, right? They have ideas where they're ready to dump, I'm sure, but even they can't tell exactly, right? So they do tests. They do tests, and they see what happens, how people react, and I think this might have happened even faster than they expected, but they'll take it. They'll take it. So you can see these large dumps. These are large whales dumping it at higher prices. These are people that bought it 3,000, 4,000, right? thousands of them, right? They're making millions of dollars in here dumping this, but there's got to be buyers, right? So there's got to be buyers. So selling into all of this FOMO, they got to create that FOMO. They need buyers, right? But eventually they run out of buyers, runs out of steam, right? Not enough people were telling, their coworkers, jump in on Bitcoin, right? In 2017, that built up, right? That built up a long ways. This is just a money grab, most likely. So this is most likely a top of a market cycle. It's just how it goes. So it will trend downward, most likely. I think that anybody who studies trends can see a speculative bubble here, but you have to wonder. We don't always know exactly what's going on behind the scenes. It's not a crystal ball, right? Nobody that I know predicted anything like this, right? I've been watching charts for the last year and all during this time, and nobody, right? Everybody had these charts that, 2021 will be the next big one. Well, they're here to fuck up your game, right? So you start trying to predict things instead of reacting to what's right in front of your face. As a trader, none of that does you much good, right? So we want to think what's going to happen now. All right. So what we do is we look at these levels, right, in the house. And these are floors. And what they do is there are buyers and sellers, right? There's retail traders, which make up a large block. But then there are whales. Some whales coordinate, but a lot of them are fighting amongst themselves too, right? We're watching an argument over price take place. So there are going to be some whales here that are some insiders. They're going to drive it up, and this is a resistance area, right? A lot of people are going to see these levels, thousands and thousands of people, a lot of big boys. They know that this level, right? It takes effort to move the price. It takes effort, right? And that's why we have volume. Volume is a measure of effort. Okay, so pushing this price up costs money. It's either people, James and Average Joe entering the market, or whales that think the price is going to go up. Now, for whales that know the price is going to go up, they're buying in here. They drive the price up, and they can sell it up here. They just make they can just make a cool million right there. Boom. With this little bubble, right? They can make little bubbles, and they're constantly doing this even all the way down, because even they know that there's going to be a lot of selling pressure as we go down these levels, and we encounter resistance. So here we are again. We have this bubble up here, and you can see we are right here on the top. Right here on the top of where these candles closed. Right, so I'm going to make another video next, and I'm going to go over the psychology of what's happening here, what might happen, and we'll talk about it.